Erin Doan. Erin Doan from State Farm Insurance. Is it sunny and warm where you are at?
It is. It started out a little bit slow in terms of being sunny, but it definitely is sunnier now and warmer. So as Michigan warmed up, it definitely warmed up down south here as well. So
Yeah. Yeah.
it's going to be the warmest day actually today. So I might, skedaddle around 3 or 4 and get outside a little bit. But I'm going to work all day until in the afternoon, and got meetings planned, virtual meetings with customers, and it's just a normal day. I'm just in a different location.
Yeah, yeah, absolutely, and you get a chance with technology to connect with your team, and they're probably loving the weather as well.
They
And
are. Yeah, Heather was in Grand Rapids yesterday, and I think it got close to touching 70 yesterday in Grand Rapids. So she
yeah,
she said it felt so good.
yeah, absolutely, absolutely. Well, we're going to see 50-degree temps in many parts of the listening area today. Glad to connect with you. Normally we're talking insurance,
Hmm.
which is obviously a major, major part of State Farm and your agency. But there's been a lot of branching out, or at least uh, uh, providing additional information to your customers because. And I would love for you to respond in a way that can bring that insurance and that financial planning idea together. How does it really merge?
Yeah, I think yeah, it's a great question. I think, well, first of all, I want to go back just real quick in that I became licensed in this space to help people with their investments back in 2003. So actually, in my current role for 23 years as a State Farm agent, I have actually already been in this space.
Hmm.
What's happening is there is a massive transition for State Farm to become significantly more nationwide into this space. So I in fact came to State Farm because I thought, wow, that is great. All their wonderful customers being a good neighbor and going into that space, I think it's great. So I think going forward, what we're finding though is now, we have advisory, which is a technical elements. There's a lot of it I can't actually speak to. I have to be very careful on the radio as to the details I get into that because of regulations.
Yeah.
But just to let you know that this is a space that we're into. So if you think about it from an insurance to savings for long term or other things you're trying to do as a family, think of it this way: we are a company that builds relationships, has rapport, and are known for educating our customers and protecting them well, right? This is the State Farm agency force of almost 20,000 agents across the country. So a few years ago, State Farm actually got copyrighted protect, comma, then invest. So
Hmm.
I love that that's now it's on our signature lines for many State Farm agents and their team members, is that we're helping people protect what they've worked so hard for in the insurance world and now invest. So if you have the catastrophic protection, we're who knows it better?
Mhm.
And in fact, from an income standpoint, people are familiar with State Farm being really good about when people save, how do we distribute money? And so most advisors would say that they are built based on assets under management, meaning the more money and more savings that they have with your money, the better. But there aren't advisors that are helping you get a personal umbrella policy to protect in case you get a major lawsuit, or helping you with your health insurance needs, or providing, really great conversations about in-depth life insurance and which type is truly the best for you, not only today, but long term. So, long answer to your question, it's really, we are really well suited to help you protect in case a major thing happens in your life, a major accident, premature death, a major injury, and then in that space, helping you save for your future, not only for retirement, but perhaps for college or for buying your first home or a lakefront home or cabin up north. We're in that space to help you do that every day, and we're growing significantly in that arena.
Well, obviously, you must have seen over the years that your customers, your clients, those that you were insuring, had some unanswered questions, and to be able to expand upon that, and not necessarily that it's a State Farm initiative. It was an Erin Doan initiative that you saw later that State Farm embraced across the country, and that kind of makes you one of the leaders in that space, which is really neat to hear about that. When when we talk about knowing your number, what does that mean?
I think it really means of like, what do you need to save based on your income? If you need to, the rule of thumb, and it can be a little higher, a little lower, is that when we actually retire, hopefully all our debts have been paid off. That's the
Hmm.
goal, right?
Hmm.
And we don't need to travel maybe quite as much in terms of maybe in a car, because we're not commuting to and from work. So we need about 70 to 80% of our income the day after we retire to live comfortably for most people. So
Okay.
I think it's just understanding that, well, what is that number? Because I've heard people say, well, I know I've saved well. I actually had somebody, an advisor, tell me that I'm doing really good compared to so many people my age.
Hmm.
But when I ask people, like, tell me about what your end number, what that number looks like, so that you can have 70 to 80% of your last year of working. What does that number look like? Is it a half a million? Is it a million? Do you need to save 2 million?
Mhm.
Do you know where that number is based on your current income? And I'm telling you that well over 90% say, I really don't know at all what that number is. I've never really looked at that. Nobody's really sat down and taken the time to explain that to me or what that even means. And I could use some help. And so what State Farm's really doing in this space is we're helping a middle America. We're helping the everyday worker, the blue collar worker, the person that doesn't have a quarter million even, they don't even have 100,000 necessarily, but we're helping all sorts of people in all those savings, or just getting started. And you don't need to have a half a million for us to talk to you, or a quarter million. We're going to talk to you no matter what your situation is and help you. And I love what State Farm is doing in terms of how they pay us. It's a very level playing field in terms of how much they pay us for any solution we provide.
Okay.
So meaning there isn't any massive incentive for me to push you into one solution over another. I'm truly able to look at banking solutions, investment solutions, insurance solutions to provide, literally a first class, individualized plan to help you today, kind of looking at it from the short term, but also into the long term for perhaps decades down the road.
When we look at, and as you were talking, I was thinking a couple of things that it feels like there are more people working past the retirement age. Is that, some will say, well, it's because I'm bored. I want to go be a greeter at Walmart, or I want to be able to go do this and not just sit around at home. Is there things that you are learning that pushes those that are, should have been in retirement age or taking that step and moving into that relaxation phase, I guess. But now they are working more or extending those years, or maybe have not been prepared enough. Do you see that?
I think part of it is perhaps a little bit not being prepared enough. But I think once people are realizing what's happening in their own families and some of the or some of the people in their lives, they're realizing that how long people are living.
Hmm.
So, as a guy in his 50s, and I think you're in your young 40s,
Hmm.
um, you think about 30, 40 years ago, it was pretty rare to see people over their 70s.
Yeah. Yeah.
And Chris, if you think about it now, there's people all over still going to Florida in their 80s and even early 90s. They're
Mhm.
driving well into their 90s and just doing better and living longer. So here is one of the biggest things I'm seeing in this space is running out of money
Mhm.
and longevity. So it sounds funny, but living too long and running out of your retirement savings is a concern that where a lot of people are still working, part time because of that,
Mhm.
or into their 60s. and have to have that little extra job. And what's super powerful is the software we're using to plug in your personalized information. It's really even, in fact, telling us where you're at. So let's say you're in your 50s, late 50s, and you go, can I retire at 62 or do I have to wait till 65 or 67? What's super powerful about the software is we can give you an idea if you are on target and you still have some time. So
Hmm.
most of my customers lately over the past few years, so many of them have been in their 50s and early 60s, and they know now how close they are or what they need to do. So let me give you a quick story. Stories help people.
Absolutely. Yeah.
So I had last year I had a couple that are late 50s, one of them early 60s. We both want to be done and retired at 62. And we went through the numbers and what we found, and I said, when we actually gave them the report and sat down with them, is we found out that they were about a few years short of part-time income to both being able to do that. So the good bad about that is I said, no, to live the lifestyle you currently are used to, having your house paid off in the next couple of years, you're really close, but you're going to need to, between the two of you, for 3 years, make about 40,000 a year.
Mm.
If you guys can do that for 3 more years and have a decent rate of return based on what we expect, can't promise, but based on history and how you want to be in the market, you're going to be fine until your early 90s with the income that you guys need by just doing that. So as much as, and you know what they did right in the meeting, which is super powerful, is one of them said, "Oh, okay, I want to work, at this home improvement store."
Hmm.
Okay. And the other one goes, "Yeah, I want to work at the craft store. What do you want to do? I don't know. How about we each like, do you think we can make, 20 grand a year?" And they're like, "Well, we'll figure out how much they'll pay us per hour." And one of them's still working full
Wow,
time and they're already thinking about their next job.
that's impressive.
So it was so cool that we could help them with their number to know in advance before they retired, because so often people go, "Well, I'm retiring next year." And they're like, "Do you know, like, are you going to be, well, it doesn't matter. I'm done. I can't do anymore. My body's worn out.
Yeah.
That's it. I have to be done." So I think it's been really, really good for people to see their own number, to know where they're at, to see if they're on track.
Two questions come up, and I know we want to cover a lot this morning, but I'm just curious, and some of my questions, that 70% that you started out
Hmm.
just a few minutes ago, um, because we've talked over the last couple of minutes that life expectancy is longer, people are obviously living longer. Does that 70% number, is that calculated now based on that? Has it increased over the last few years? And the second part of that question is there a sweet spot? And what I mean by that is, have like that couple has come in and you talk it over and say, okay, you need to make 40,000. Would it have been a better moment for them to have come in 5 years earlier, 10 years
Hmm.
earlier? Is there a
Hmm.
sweet spot? I guess.
Yeah, I would say no, because another couple I'm thinking of right now have started to save really well, and she's 23 and he's 24,
Mhm.
and we did the same exact thing, and it was super powerful. But because they both started about 20 years old
Mhm.
and they're committed to it, and it's not huge money, Chris. I think one of them was saving $50 a month, and the other one was saving 75 since they were 20.
Okay.
So that projection, based on their current income, is that they're going to be perfectly fine to retire in their mid 60s,
Hmm.
and that's 40 years from now.
Yeah. Yeah.
So it's super powerful for them to see the number. And what's so cool is it saves it on our software.
Mm.
So me as a State Farm agent, and now Heather actually just passed her licensing. So what's great is to have two people in the office that can, side by side, work together with our customers and help them in this space. But that I know that every year that when we sit down with that young couple who are 23 and 24, as the years go on, just to tweak it, make sure things, because life happens, right? Things change. They may even need to borrow some money out of, one of their accounts and then have to catch up and or slow down in what they're putting in. So
Mhm.
we can continue to kind of tweak their plan as time goes on, but all along they're going to have an idea like, are they heading in the right direction? And they will know, what year that is, based on as they get closer and closer as the decades go by.
If you're just joining us, we're talking with Erin Doan from Erin Doan State Farm Insurance, and the conversation might seem a little different than insurance today, because you have not only dabbled in the financial planning, but you've kind of wrapped your arms around it, and your staff has as well, to help out individuals. And I would assume that when they walk out of the office, that anytime you can see projections, anytime you can see, a positive future, you're kind of on cloud nine a little bit there, and we see that. So that kind of leads me into my next question, which is, when somebody is looking for that financial planner, are there some expectations? Is it expert guidance? Is it, being able to advance their portfolio when it comes to, okay, you've got insurance with us, let's take care of your financial planning? What does that look like? That Because when you start diving into it, just like anything out there, it can be a bit scary.
Yeah, Chris, it's a loaded question, but I will say that what's really interesting and ironic about the insurance, banking, and investment world is that we have a sense and understanding from the banking world of, we're learning more about APR and interest rates when we get loans. Got
Mhm.
that down pretty good. We want a great interest rate, right? Who's going to
Mhm.
give us a great interest rate? How about insurance premium, right?
Mhm.
Yes, we want good service. Yes, we want our claim to be covered and handled and taken care of if we do end up having a claim. Yeah, but we want the lowest insurance premium. What we're learning and finding in the investment world, and it continues on, is that we ask people, well, tell us about what you're paying for the advice, or for your investments.
Mhm.
And people, they don't know.
Mm.
Chris, people don't know what they're paying. People don't know that they could be, they're paying 10, 15, $20,000 on a $1 million account,
Mhm.
okay?
Mhm.
And that they're paying, 1,500 every year, 15,000 every year
Mm.
for the advice. And sometimes people aren't even seeing their advisor. So the question we always ask is, do you love your advisor? Are they really earning their keep and doing their best to have a conversation with you to keep you posted and up to date, so that that you're choosing the right strategy, and that your fees? So what we're saying is, give us your statements. All we're asking, so for those listening, if you give us your retirement statements, your savings, and from, let's say, an old account that you had somewhere else, or these, it comes in the mail every quarter, and you're like, I have no idea what we're paying. We have a way to show you exactly the fees you're paying for whoever it is, and we can show you our fees and make a comparison. So you get prices on your insurance, your car insurance, your home insurance. Get prices on your old investments, your investments that are elsewhere, that you really don't spend any time, understanding what's in it, how much you're paying. It is super important, and it matters over a long period of time. The more you pay in fees, the more it reduces the amount of money you're going to have for retirement. And if you pass away with some retirement savings left, you're going to have more to give to your spouse or to your kids or grandkids by paying less fees. So it's super important.
Well, it brings it full circle too. Just a few minutes ago, you were talking that your focus is on the blue collar workers, on the everyday people out there.
Hmm.
And as we probably all know, and can do some assumption too, is that the less we make, or the not as well off that we are, the more we want to keep kind of a tight rein on what we have,
Hmm.
and keep focusing on that. And
Hmm.
that's part of what you said. I would assume that the more you make, the less the less factor in on how much you're paying for those services. Where the less that you make, you want that to be a priority as part of your future vision. Not only how much you're going to have, but how much you're paying to get to that point too.
Yeah, I think it's just a worthy cause. It's interesting in our society that we don't take time to look at how much we're spending on this massive number that sometimes and oftentimes gets larger than the value of our home
Hmm.
and the interest that we're paying on our mortgage, that we're not even spending any time to understand the fees for an account that's oftentimes for people when they get in their 50s and 60s that is worth more than their home. So it just, you're right. There's most of our clients that I'm talking to have somewhere in their 50s and early 60s. They have 200 to maybe as much as 500, which it's going to be a challenge even for our blue collar everyday workers. That sounds like a decent number, but that's not a huge number, and most listeners would agree with me, when they hear that. But that is a very common amount for, I would say, a majority of the people who have tried to save the best they can for the last 20, 25, 30 years. Is if they hit a half a million, that's been pretty darn good for a lot of people, for sure. But to get to that point, they had to make some sacrifices along the way. And if the fees were really high and they didn't know it, there could be thousands of dollars that they could had more in their accounts and they just didn't know it.
Mm. You had mentioned throughout our conversation online tools. You have tools at your
Mhm.
disposal. It sounds like that can help a lot. Is there tools that the listeners and viewers can also access on their own to kind of start those juices flowing in the sense?
Yeah, I think it's a great way to, like you said, get your juices flowing, kind of see what's out there. Obviously you can chat GPT this information, or Google it and try to find retirement calculators and try to put some information in yourself. And again, a lot of people want to do things like this themselves. So
Hmm.
at statefarm.com, we have some people would be amazed at how big and deep and thorough in the whole insurance and financial world that statefarm.com is. It's such a massive, amazing tool to use. It is a great place to go. But I think the power can be is, even the best advisors can't outthink the market, right? So it's not always what you're in, or timing the market. It's actually, the biggest thing is time in the market, getting your investments in place and leaving it alone. And so often people's emotions when the market goes up or down put money in when the markets are way up and start to stop and slow down and pull money out of the market on at the wrong time. So it's a matter of just.
Oh, I think we lost Aaron for just a second. We'll see if we can bring him back in here in just a second. Let's see. Oh, there he is. Stand by, Aaron. I know you can hear me in the green room. Hey there. Let's see. There you go. I'm
Here
with
I
it.
am. So it's
Uh,
getting long-winded, but I hope that kind
no.
of answers that question.
Yeah,
But
absolutely.
but I
Well,
mean,
it's riding the wave.
the software, well, the software we have, to be honest, internally, that State Farm buys,
Mm,
is a proprietary software that cost the company a lot of money, but that investment of that software really transcends and is really nice to provide a very professional report that we can print out and hand to people for free. We're
mm,
not charging for that report. We're not charging for giving you information on what your number is. To go back to the early part of the conversation where we were talking about, well, how much do I need to save? Well, we
mhm,
can tell you the number from the software that we have. All we need is your statement to start. If you
mhm,
give us your retirement statement, we can actually start the conversation, see where you're at, see what fees you're paying, and start to get an idea of, we can help you without you spending your time and energy and scratching your head trying to figure it out. what you really need to have in retirement by saving today.
And before we wrap up, this isn't new that we're sharing necessarily this morning, because I remember 3 years ago, 4 years ago, I don't know how many years, and help us clarify that you were starting to get into this. So this isn't the last 12 months or anything like that, right?
Well, I actually, the reason I came to State Farm is because they had their own proprietary investments for the retail public. And
Okay.
I thought that is amazing. They had this huge following and trust as a good neighbor, and with their home and auto insurance and life insurance and annuities, fixed annuities and things like that. I said, wow, if they're going to go into this area, I want to be a part of it. So I got licensed, to help people with in this space in 2003,
Mm.
and have been active in this. What's happened is that we are now as a company, State Farm, all new agents are going to be fully licensed to be able to help people in financial services. That is the requirement of becoming a new agent. So me, as kind of an old dog who's been playing in this space since 2003, what I love about it is we're going to start to see some scale.
Mm.
You're going to hear things over the next 2, 3, 5, 10 years about State Farm really impacting, communities and people in particular, individuals, the everyday American, to be able to save and know where they're going and what they have to be able to help them. So we're going to help you protect what you've worked so hard for through insurance, and then we're going to help you invest. And I love that we copyrighted, we have a copyright on that statement: protect, comma, then invest. And I love it. And I'm gonna swing at this for the next 10 to 15 years, man. I might go into my 70s still doing this. So
Mm.
I am not going anywhere if you want this old dog to help you save for the future.
That's pretty cool. Well, we have covered a lot of it, and it also felt like just scratching the surface of it.
Hmm.
There's
Yeah.
that one-on-one relationship, being able to go over numbers, being able to plug information into the software, being able to get results, and then work on that year after year. And it's not a set it
Mm-mm.
and then surprise yourself at the end. No, you want to keep an eye on that, and I think
Hmm.
that's important, and that's what you can do with you and your team at Erin Doan State Farm Insurance. So, Erin, we appreciate it. Let's reconnect. Unless there's anything else that you want to add to this, but we certainly want to encourage people to reach out to you. And how can they do that?
Yeah, I would say the best way is to stop in. We are located a half a mile east of Meyer on US 10. Literally serve, I think we're up to like 70 counties
Mm.
in the state of Michigan. We have business all over the state. A third of my business is outside of Mason County. So
Mm.
if you're in Oceana County, Lake County, Manistee County listening, and you want to, I want a second set of eyes. I want to know if I'm paying too much on my fees,
Mhm.
for my investments. Drop a statement off. It starts there. If you drop a statement off, give us your name, address, date of birth, your contact information, and I will personally take the time to see where you're at, see what kind of fees you're paying, and give you a second set of eyes, and try to understand more what your goals are. If from that point, once we start with the statement. So that's the biggest thing. You can reach us by phone to set up a time to come in and talk to us at 231-757-3115, or find us online. Just go to luddingtoninsurance.com.
All right. Sounds great. Great information there. Erin, we appreciate you a lot. And we want to make sure that we encourage our listeners to stop by, and with Heather there too.
Yeah,
You know
just got licensed yesterday, man.
all right, that's cool. Congratulations. We want to make sure that we know that, to say that to her. All right, Erin, you enjoy some time. I know you are out of the area for right now, but it's work, work, work for you. Just try to get some sun and some sand in as well, a little bit here and there,
I will.
and enjoy some warmer weather. It is 102.7 Mom FM and Hot Country Hits 99.9. Let's do this. We'll